All right, y'all. So in this video, I kind of want to go over an average day of trading for me and how I look to trade and how I look to take trades on an average day when there's not a lot of volatility, and if I'm just looking to potentially day trade or even scalp that day. So right now, these are the trades that I've taken today so far. Okay, I entered my first short trade up here. I entered my first long trade down here. I added to my short right here. I added to my long right here. And I want to, before I get into the entire process, I'm going to be outlining the entire process that I go through. Okay, this isn't flashy. I'm not trading with billions of dollars. Okay, I'm not making millions of dollars, right? I'm making small profits, and I'm being satisfied with small profits. And I'm not expecting the biggest moves in the world here. And I'm just going to walk you through my process. But before I get into that, let me just say, the underlying thing that causes me to be successful here, notice this, okay? Right now, the trades that I'm in are in profit. I'm up for the day right now, $1,000. For me, I consider that success. People are always looking for that huge move, okay? That huge move, that one trade that's going to double, triple, quadruple their account. 99% of the time, you're not going to get into that trade. Yes, we catch those swing trades that make us thousands of dollars per trade, right? I've taken them. I've live streamed them. Your average day, especially if you're not at a major area of support or resistance, you're not going to get those trades. And so when we're going into an average day of trading, where basically this is like half an hour before New York opened, and the entire day, I mean, Bitcoin has only traded, a 2% range from high to low and now back to the center point. And so, we have to keep this in context here. All right, we're taking profits. We're locking in profits. You notice my entry, my combined entry for the long trades, 20,700. My stop loss, 20,700. These trades are guaranteed winners. If I get stopped out at my entry, I'm guaranteed a $400 profit for my longing. If I get stopped out of my entry for my shorts, I am guaranteed a $600 profit for my shorts for the day, okay? So we need to keep that in context because people see me enter trades and they're like, well, it went the opposite direction 3 hours later. Now what did you do? Did you get wrecked? No, I didn't get wrecked because we're using good risk management, which means we're not risking more than we can afford to lose per trade, and we're taking profits early. In fact, maybe I'll get stopped out of a long during this video. So when I approach the charts every single day, what I do is first I come up with a plan. So this morning in the VIP Discord, I had two general plans, okay? I was looking to take a short from around 21.1-ish. I was looking to take longs from my first area to long was around 20,600, okay? The first thing I do when I approach the charts in the morning in the VIP Discord is I post my trading plan for the day. And what this means is I identify key areas of support and resistance where I am looking to take trades. This does not mean that I automatically enter a trade if price gets to that level. But what it means is that if price does come to that level, I automatically have a bias for looking for a trade at that level. And then I will look for confirmations so I can get that confirmation bias where everything's telling me the same thing. So I can get into a position if I want to. And I just did another little take profit on my long here, right? We're just locking in little profits as we go. That's how you got to do it. So I came to the charts this morning and this is what I saw, okay? I saw that price was somewhere around here in the morning. And, look at some of these areas. Like I have levels marked on my chart, right? When I come to the chart in the morning, I am going to be looking for key areas of support and resistance. So right here, we had this key area of support because we had a Fibonacci golden pocket retracement from the low to the high, and we also had a high volume node right here. And so immediately I will put a box around this level and say, if price comes to this level, I will look for a long. And then what else did we have from the high that we put in yesterday, right? Let's see. Was it yesterday? Yeah, it was yesterday. Was it yesterday? I don't even remember anymore. What day is today? From the high that we put in on July 7th to the low that we put in a few days ago, we had a Fibonacci golden pocket retracement coming up just above the high that we were looking at when I came to the charts. So immediately what we should be doing when we come to the charts in the morning is we should be identifying key levels. And for me, these were my key levels. Okay, I had one up here around 21.1. I had one down here at about 21.6. Okay, and I had many others. And I post these in the VIP Discord every day. If you do want to join the VIP Discord, where I post the trade setups in advance, and the levels, and we have multiple live streams a week. You can go to patreon.com/Jason Casper. Also, if you want to learn how to trade this way and mark out the levels and have a plan, you can check out the course. 25% discount in the description. JasonCasperTrading.com. This course will give you the blueprint you need to always have a plan in advance so that you're never caught off guard. You can come to the charts every day, and instead of FOMOing and chasing price and saying, I wonder, pump or dump, what do I feel? You don't have to worry about any of that, because you come to the charts and you say, okay, if price comes up, I know where I'm looking to take a short. If price comes down, I know where I'm looking to take a long. It takes the pressure off. You don't have to worry about what to do right now. No, you can worry about what happens in the future. That's what trading's about, staying one step ahead of the markets, right? So when you come to the charts, you need to be able to identify key areas of support and resistance. And that is the first thing that I do when I come to the charts every single day and I'm looking to potentially take a trade or multiple trades. Today, I've been trading since 9 in the morning. It's currently 2:30 in the afternoon. I'm about to head out for the day, right? But these are the trades that I've taken in the past, whatever, 9 a.m., 6 hours or so, right? It's been about 6 hours since I've been trading, right? My first trade entered at 13:05 o'clock. Just took another little long from here at 17 o'clock, right? And so, it's very, very important that we mark our key levels. How are we going to do that? How are we going to mark key levels? This is also something that's important that a lot of people don't understand how to do. And, of course, for the full in-depth detail on how to do this, I recommend checking out the course. But really, the way we're going to do it is just by looking at market structure, right? We're going to be looking at market structure and say, where are there areas of support and where are there areas of resistance? Even without using any fancy tools, we can see that price has found a sticking point down here, for example, at around $18.8 thousand, right? $18.8 thousand. We can see price found support here once, twice, 3, 4, 5 times. And so we can expect if price comes down to this area again, we should be looking for a long trade, which is why I was, in fact, looking for a long trade from this box. This was a while ago, right over here. Right? This was the general trading plan to long that $19,000 level. And we actually ended up taking 2 trades from there. The first one was when we got our bullish divergences, actually, we took 3 longs from there. The first one was a golden pocket retest. The second one was when we came down and we got a bullish divergence on the 12-minute time frame. Right, and the thing that's about all of these trades here that we took is that we had the plan in advance, right? And then the third one was the retest of the weekly level. After we got that dump when the inflation news came out, we were saying, okay, if we come above this key area of resistance and flip it into support with the trigger wave on market Cipher B, we can take the long trade, and that's exactly what happened. We got the bounce, took the long trade, and it ended up being a really, really nice move, okay? And of course, sometimes we take losses as well. But in general, if you have a plan in advance, you can do pretty well and have a lot of wins, right? This is step number 1, identifying key areas of support, right? We were able to take a short from $22,500 because we knew that this was a key area of resistance, right? We had it marked out on the chart. This is a short that I live streamed and all that, right? And so that's what you have to do. And we should always be looking for the markets to form key areas of high and low, right? So just come to the chart, take a look, and draw boxes at the highs and the lows. Start on the high time frames, and then go down to the lower time frames, like the 12-minute time frame right here. And we can even do this on the 12-minute time frame, right? Look at this. We can say, okay, we had a key area where price found support once, twice, 3 times, then it was resistance, then it was support, then it was support again, right? And we could say, okay, we have an area of resistance. We can say maybe up here, right about here, because we see price found resistance, and then support, and then support, and then support, and then resistance again. And so we might say to ourselves, okay, If price comes up here again, we should be looking for resistance. We should be looking to take a short. Now, we can add tools on top of that. For example, we were just using our eye here, right? We weren't using any fancy tools. We're just using our eye. Resistance, support, support, resistance, okay? And if anybody doesn't know what support and resistance is, we can think of it as floors and ceilings, right? We can think of it as a house right here, right? We have a house, and the house has multiple floors, all right? And the house has a basement too, okay? And this is the roof to the house, right? Price will respect these levels. If we are on this floor of the house and we come up and we jump up high, we'll hit our head on the ceiling and come back down, right? If we take the stairs down to the basement, we might hit the floor and then come back up. And what used to be the floor is now the ceiling, right? And then we can reject from there, right? It's very you have to think of it as levels, like a house. That's what support and resistance is. Now, if we use some more fancy tools, for example, Fibonacci, which we go over in the course big time, right? That's one of my favorite tools. We can see, what do you know? The level that we drew with our eye is exactly that Fibonacci golden pocket retracement. So we want to be able to identify highs and lows on the chart, and then we want to find other things that are pointing out that level and saying this is a special level. For example, the 21.1 area, right, to 21.3. Not only do we see clearly with our eyes that this was resistance, support, 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 resistance, it's also a Fibonacci level. So this should point our eye to that and say this is a special area. Volume, we can use volume and see, wow, look at that. We have this previous value area, the value area low is lining up very nicely with the 0.65 Fibonacci level, right? And so we can see that this is just a very important area. And so we mark that out on our chart. That is the first thing that we have to do when we are trading for the day. And we go on lower and lower time frames. We could even go down to the 1 minute time frame, right? And this works even on very, very small time frames, where today, for example, we had this little sideways market right here where we had a high and we had a low. And look at this. We have our high. We come to our high again. We reject. We come down to our low, which used to be resistance, now flipping to support. We come back up to the high, reject, come back to the low, come back up to the high. This time we break out of the high and we retest what used to be resistance as support, come up, come back down to the support, and that support is this area of support is the area where I did get into the long trade from, right? It also happened to be a high volume node. So we're going to be looking for areas, we're going to be looking for confluence, and once we have that marked out, once we have a plan on our chart, and we should be able to map it out and say, these are the areas I'm looking, right? I'm looking here, I'm looking here, I'm looking here for trades. Then what we do is we wait, and we set alerts. We're not going to just take a trade because price gets to a certain area. We're going to now set alerts, and these alerts are going to inform us if something is going to happen there or not. So the first trade I was looking for this morning, well, there were actually two trades I was looking for, right? The first trade I was looking for was from down here, this area of support right about here. And then I was looking for shorts at this area of resistance right here, okay? Now, you might notice something, right? My short trade didn't necessarily play out. It didn't come to my exact level, but I was still able to get into a trade here. Now, why is that? Now, this comes down to having multiple tools in your toolbox, okay? The more experience you get as a trader, the more you'll be able to spot trades in different contexts. So, you know, the ideal trade that I was looking for from this high was to come up here with a bearish divergence on the 12-minute time frame, right? I wanted to see bearish divergence on the 12-minute time frame as we took out this high and smashed right into the golden pocket. Well, guess what? We didn't smash into that golden pocket, but what we did do was we still took out the first high, right? We had the first high right here at 21,000. We took out that high, and look at what we did. We also still got bearish divergence on our 12-minute time frame. So even though we didn't hit the exact level, we did get our confirmations on market Cipher B on the 12-minute, and if we come down to the 1-minute time frame, we can even see on the 1-minute time frame, as low as the 1 minute, that we were getting bearish divergences on the 1-minute time frame, right? Momentum is getting lower as the price is getting higher. Now, this gives us a setup that I like to call chickens drinking water. I made a video on this yesterday, but essentially what I'm doing now is when price comes to a level, I'm looking at my indicators, in this case, I'm looking at market Cipher B to determine, is this an area to take a trade, yes or no? And what you have to be able to do is you have to be able to look at an area. Now, again, notice what I did here, right? The same thing. This is a 12-minute time frame. I'm simply just looking at this little area of price action as a sideways market, and I'm simply just longing the bottom and shorting the top. It's no different than when we are looking at a very high-term time frame like the 4-hour, and we're marking out lows and highs on the 4-hour. We can do the same thing on the 12-minute. We should be looking for sideways markets, inside sideways markets, inside sideways markets. Our day trades are going to be very locally, maybe on a 15-minute, 10-minute time frame. Our swing trades are going to be very large. We should not be able to, the people always ask, how do you know if it's a swing or a day trade? Well, a swing trade is going to be, you have to be zoomed out to see that, right? If we're coming to a high that you have to be on at least a 4-hour chart to see, that's going to be more of a swing trade. If you're coming to a high that looks like nothing on a 4-hour chart, that's going to be a scalp or a day trade, right? That's how that's going to be. And so we're looking at sideways markets within sideways markets, and then we have to learn to look at our indicators to determine, is there a trade here, yes or no? And that's pretty much what it comes down to, understanding how to use your indicators to determine, do I have a trade here or do I not have a trade here? So step number 1, identify levels. Step number 2, look at your confirmations to determine if you should be entering a trade or not. And these are all things that we do go over in the course. I don't have time, obviously, to go through a whole 45-hour course in one video. But this is the general gist of what I am doing when I come to the charts, okay? Now, again, I'm pretty much looking at Market Cipher B to find divergences because that is a very, very powerful thing on Market Cipher B, especially if money flow agrees with the momentum waves. So, for example here, the short that I took this morning, when you see on the 12-minute time frame that the momentum and the money flow is getting lower at the same time. That's a very powerful short signal right there. That's a pretty powerful short signal. And so this gave me the confirmation and the confidence to enter into that trade. When we came down to this area right here, this was a golden pocket, right? There's actually 2 golden pockets here. And I actually longed the first retest right down here when I got some confirmations. Now, I actually did not see divergences on Market Cipher B for this. For that one, I was looking at Coinalyze.net, actually. On Coinalyze.net, when we came down and we came up for the retest of the Fibonacci Golden Pocket, which we got right here. Ugh, I hate the fib on this. Let's remove all this background noise here. Coinalyze.net, this is looking at order flow coming in and out of the market, right? I'm looking at cumulative volume delta in order to determine if I have a trade entry right here. When we look at what happened down here, okay, and we zoom in, we can see that actually as we were getting a move to the upside right here, we were seeing shorts entering the market, right? We saw a lot of people shorting. We saw CVD getting lower. This showed us that there were people shorting right here into support, and those shorts are being absorbed by limit orders. Now, if you want to learn more about this, you could check out the Orderflow course we did. There's a 15% discount in the description of the video, but this will go over how to read order flow, how to understand delta, cumulative volume delta, absorption. There's a preview here that will show you basically everything that you're looking at here. Primarily goes over Exocharts, but there's also free tools you can use, such as Coinalyze.net. If you use the coupon code JUICY, you can get a 15% discount on that course. Right? So once we come to an area, we need to be looking for some kind of confirmation to get us into the trade. Now, step number 3 is you enter the trade with confidence and with no emotion, which is very hard to do, and I'm not going to sit here and tell you I don't feel emotions when I enter a trade. In fact, this trade, I almost kind of FOMO'd into it, right? I wasn't going to long here, but somebody in my Discord posted, shout out to Boyan, posted that we came down to a confluence, and when I saw it on his chart, I'm like, dang, that's a juicy confluence. And so when we came down to retest the golden pocket, I went for it, and because I saw that absorption on Coinalyze.net. But you have to be able to enter the trade with confidence, and you have to use good risk management. What does that mean? Risk management means that when we enter into a trade, right, we are not going to be risking more than we can afford to lose. And what that means is this. If you have an account, you should not be losing more than 1 to 3% of your total account per trade. I'd say 1%, 0.5 to 1% should be the most you allow yourself to lose per trade. Okay, this involves having a risk management strategy. And the reason why this is so important is because let's say you put 25% of your account on every trade. Well, if you lose 25% of your account, guess what? If you make 25% back the next trade, you're really now still in the red 12.5%. It's an uphill battle. Once you start losing more money, then you can afford to lose. But if I lose 1%, it's quite simple to make back 1%, 2%, 3% on your whole account in one trade if you are using good risk management, right? Now, again, we're not going to be making that much every single trade, but we have to use good risk management in conjunction with having a strategy, having a plan in advance, because if you're planning for things and you know what confirmations you're looking for, and you know that the strategy has a very high win rate. For example, this short right here, I was like 99% certain it was going to be in profit. There was no doubt in my mind it was going to be a winning trade because I've seen this happen a million times. I know what is going to happen here. This one, a little less confident, okay? But still, I used good risk management, and this leads me to another piece of risk management, which is very, very important, and that is locking in profit and moving your stop loss to the entry. You have to understand that you should approach every trade as if it's going to go against you. When I shorted this, I needed to assume it was going to immediately go against me. And so what I did was, as soon as we got that first drop, I took half the trade out right here. Half. Moved the stop loss to my entry. I had a very good entry originally, right? I added to the short right here, which is about to get stopped out, as we can see. This short is crazy. It's about to get stopped out right now. Or not. We'll have to see, right? What's going on right here? Well, just stopped out of the short, right? And now we might dump from here, and that's fine. Okay, that's another thing. This is actually a great example that this happened in the middle of the trade. So you lock in profit early, stop loss to entry. I added more to the short here. I took profit down here, okay, which allowed me to make more profit over the course of the day because after taking half the trade out here and then putting that back into the trade here, I was able now to come down another almost 1% with a hefty position size instead of a very small position size, allowing me to make, as you saw there, $600 profit over the course of shorting today, right? Let's say that I didn't take profit one here and I didn't move my stop loss to the entry and it did go against me. That would have been a loss. Let's say that I did take profit one here, stop loss to entry, and it wicked me out. That's at least a break even. It's honestly a small win. If you take half the trade out, stop loss to entry, it's a small win, okay? Now, let's kind of take a look at the charts right here. Let's see what's happening. Let's go to market Cipher B. Let's check out the 1 minute. Things are looking kind of bullish. Let's check out the 12 minute. Honestly, things are looking kind of bullish. Let's see if we can come up to this area of resistance here. Let's check out what's happening on coinalyze.net, right? What is happening here? Do we have trades opening? Do we have trades closing? These are all things we need to be considering. We have a lot of trades closing out, guys. This looks to be a short squeeze right now. We have a lot of trades closing out. Let's zoom in a little bit here on a more in-depth order flow chart and take a look at what's happening. So longs and shorts are closing out right now. Longs and shorts are closing out right now. This looks to be kind of like a short squeeze. This move to the upside is not fueled by people longing, right? It's fueled by shorts closing. Look at all these shorts getting squeezed. We can literally see it happen. Okay, so we take profit out, we move our stop loss to the entry, and let's see, I'm going to take a little bit more profits out right now. Just make it a nice even $500 profit here. Let the rest ride. And so that's the thing. You move the stop loss to the entry, it makes it a completely risk-free trade. The short that I took was completely risk-free. And then here's something else. When I added to my short right here, as you saw, I didn't get stopped out until up here, right? I didn't get stopped out until up here, which means that I still have some playroom. If I short again here and immediately goes against me, I can still have my stop loss at my entry and leave the trade in profit. But if it goes for me, right, then I can actually make more profit on the short, which I did. Take more profit out, stopped out at my new entry after adding to the trade. The same is true for the long, right? My initial long was from down here. We came up, I took profit. We came down to the local Fibonacci golden pocket retracement right here. Right? Look at that, guys. These fibs are no joke. Actually, it was this fib right here. We came down to this one. Got a bounce from it, right? Whoop. able to add to the trade and take more profits out as we go. And now, if we continue up from here, I have a heftier position size than I did after taking half out right here, right? And so that's how I'm approaching trading like this throughout the day in order to make some decent profit. And this is simply a day where we have just, support and resistance, right? Support and resistance. A good area to be looking to take. Now my next profit would now be $21,000 at this clear area of resistance. So let's set a limit order at $21,000 and take out another. You know what? I'm not going to take profit there. I'm going to see if we can come up a little bit higher here, right? Because I think we might be able to squeeze up over the weekend. But I hope you found this video helpful, guys. I hope you found it helpful so you can kind of see where my mind is at, what I'm doing, how I'm doing it, how I'm managing my risk, how I'm taking profits, how I'm adding to the trades. Something else I forgot to mention is, like, if you add to a trade, right? Like I longed from here, took profits here. Well, I didn't take profits right there, right? I probably took profits here, half the trade out, stop loss to entry. When we came to the golden pocket, I added more to my trade, okay? When you add more to your trade, you can take a riskier position here without looking for as much confirmation, because even if I add to my trade from here, my entry combined from here and here is going to be somewhere in here, right? In fact, if I put my position info onto the chart, we can see that even though I longed from down here, my average entry is still right here, okay? I still had a lot of playing room when I added to the trade right here. I think I started out with 4 Bitcoin down here, took 2 Bitcoin out, added 1 Bitcoin when we came here, so it was 3 Bitcoin, and then I've taken profits along the way out. So even if I add to my trade right here and it immediately falls through the level, I still have some time before coming down here where I can close the trade in profit, right? I want to make that clear. So I hope this helps, guys. If it did, make sure to like the video. Make sure to subscribe to the channel, because you're not going to find this kind of content on other cryptocurrency YouTube TA channels, right? People are going to talk about the charts. People are going to talk about what happened, what could have happened. Look, I'm showing you in real time what I'm doing. So make sure to like the video. Make sure to subscribe to the channel. God bless everybody. In the name of Jesus the Messiah, God in the flesh, who died and rose again so that we could be regenerated and born again into eternal life. See you guys in the next video. Peace.